in our session today. It shall be a 37-minute session. Good morning, everybody. Good morning, everybody. Good morning, everybody. So we start right away, but I can see we are very few, but we shall not wait for anybody. Yeah, great. So here we are. So we are looking at this question, if you remember very well, of cement company. This we did, cement company. You can search for it. It's in one of the MOOCs, cement company. Enter cement company. Yeah, this one here. So it's question number 2 of page number 340, book page, page 340, page number 340, question number 2, cement company. So by any chance, have they gotten this question? Cement company, by any chance, have they gotten this question? These great students of mine who are overcoming every day, we 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 are overcoming. Every day we are overcoming. They gotten. Page number 340. I'm not seeing any yes. I hope that they get it as soon as. Page number 340. It's a PDF document. Yeah, very good. So you're told the cement company is a company specializing in the manufacture of cement, a product used in the building industry. The company has found that when weather conditions are good, the demand for cement increases since more building work is able to take place. Cement company is now trying to work out the level of cement production for the coming year in order to maximize profits. The company has received the following estimates about the probable weather conditions and the corresponding demand levels for the coming year. So there are 3 outcomes: good, average, poor. Each bag of cement sells for 9 bob and the costs 4 to make. If cement is unsold at the end of the year, it has to be disposed of at a cost of 0.5 per bag. Cement companies decided to produce one of the 3 levels of production to match forecast demand. It now has to decide which level of cement production to select. They want me to construct a pair of tables to show all the possible profit outcomes. So I would want to give you 2 minutes exactly, and please ensure that you are able to do what here, to put up some structure, to put up some structure resembling a pair of table here. I'm so sure some of you will be able to do it very well. Some of you will not be able to do it today, but in an exam, everybody will be able to give some kind of a correct solution. Because after this, I expect you to go back to all your, like one more, not all of them, one more pair of question, get to do it again. You will be good. You'll be good. Remember, what I want to teach you here is actually confidence. I need us to be very, very confident. We have to be very, very confident. Page number 340, Eric Manduku. Page number 340. So I'm giving you some 2 minutes only. For some of us, I'm so sure, especially the guys who are on leave, some of them, I'm so sure they are just waking up now. I'm 100% sure, because it's like now they've got an opportunity to freshen up, right? Especially the ones who are having today as their first sleep day. Times, I mean, the body needs that. The body needs that. But now from today, we have to work very hard. From today, we have to work very hard. Somebody, you can just take a screenshot of this and send it. Take a screenshot and send this. Yeah, Martin, we have to work very, very hard. This is advanced management activity. If you are here and you are an MA student, please get yourself something relevant to do. This advanced management. So, ladies and gentlemen, I shall go ahead and do it. I will not, in this case here, be sharing this screen all the time. Yeah, so please ensure you have your questionnaire. You have your question. All right. So when I come here, we are not doing this question. We are doing question 2, page 340. Yeah. All right. So then if I'm the one doing this, ladies and gentlemen, this is what I shall do pretty fast. And first of all, understand the question. So the question, we have here selling price per bag. Selling price per bag of cement, they have told us it's $9. And then we have the production cost. Production cost, which automatically is what there, somebody? Not 5, but 4. 4. So every bag we produce ourselves internally here, we shall incur 4 bob. There is a disposal cost. There's another cost called disposal cost if the bag remains unsold. Yeah, get proper English to use there. Disposal cost per bag unsold. They have told us is 0.5. Now, my very good students, once I have this, I'll be able to put down my table now. Very nice. Yeah. So remember that always these are the alternatives. Yeah. So you see, we shall have here outcomes here, and we shall always have what here? Alternatives here. Alternatives. So in our case, my good students, please listen. The alternative that we have will be what are we able to supply? What are we able to produce? And the outcomes, what will be the outcomes here, my good students? This will be the demanded. Yeah, the demand. The demand. The demand. So they have told us, in this case, you can see the outcome, the normally probabilistic. They have told us there is a possibility that our demand will be 350,000. We have 280,000. We have, in this case here, 200,000. Yeah. And if you remember from economics, I mean, whenever we're given demand values, then always think about what here. Think always about production. Think about supply. And have the supplies matching the demand values. So this supply here will be the same. Because demand should be equal to supply. Match them. Have the same figures like that. Now, let me know once you guys are able to draw to there. Once you're able to draw this, please mention there. Yes. Yeah, you can see most of them have been able to draw. As and gentlemen, remember, when we sell, normally, we get 9 shillings per bag of cement. This cement has cost us 4 shillings. Disposal cost per bag, which is unsold, is 0.5. So then we have our cells here. We must label the cells. So this is cell number 1. This is cell number 2, cell number 3, cell number 4, cell number 5, cell number 6, cell number 7, cell number 8. You must label them. And remember, our payoff is basically a profit here. It's profit you're getting here. And how are we going to get this profit, my friends? It's very, very easy. Very, very easy. To get our profit, we shall take revenue, we subtract production costs, and where possible, we shall subtract disposal costs. Where applicable, not where possible, we subtract the disposal cost. That's how we get profit. And as an accountant, really, calculating profit will not be a big thing because this is what we do in our workplaces every day. Every day. So revenue minus cost, production cost that is, minus disposal cost. Yeah. So we start with the number 1. We start with cell number 1. So for cell number 1, I will write down the supply. So cell number 1, how many units here are we supplying? We are supplying 350,000. Or we are producing 350,000. And what is the demand for cell number 1? The demand for cell number 1, you can see here. You know, they are meeting like that. So the demand is 350,000. So here we have a perfect match, and therefore the quantity sold. At the end of the day, we normally compare supply and demand and take the lower. And take the lower. So somebody please help me share that question. Which question here? On top here. Question 2, page number 340. Yeah? Page number 340 of the book that I gave you yesterday. Of the book that I gave you yesterday. Thank you, Chaji, for sharing. So quantity in this case here sold is the lower. In this case, it's a perfect match. So we sell 350,000. So then could you kindly give me the profit here? Give me the profit here. So we have sold 350,000. You are the ninjas who told me that the price per bag is none. The price per bag is. Yeah. And then, of course, we supplied or we produced 350,000. And the production cost is 4. In this case here, there is no bag being disposed. There's no bag being disposed here. Yeah, which I'm being given by some ninjas here that number 1, we have 1750,000. So this is what I've come and write here. 1750,000 is the first profit. Now go to the second one and try doing it yourself. Second one, and you try doing it yourself. Second one, and try doing it yourself. Second one, using the same argument, and everybody is doing it. Not unless you're trying to hide yourself from your boss. You know, when you are hiding yourself from your boss and you're working, you may not be having papers yet right on it. But unless you're trying to hide yourself somehow, please ensure that this one you write it yourself. You tell us for cell number 2, what are the possibilities? What is the supply? What is the demand? Compare the two. What will be the effective quantity sold? So Hamis is giving me 1080. Thank you so much. You can see user is trying to hide there. You know, man must survive. You're right. Man must survive. How do we get it kindly? That's what we are doing, Chetumba. Everybody's trying to get it, Chumba, then I do it. Before you ask Chumba, try getting it. Even if you get a zero, Chumba will be happy, so long as you have something. Dolly, thank you so much. Dolly is also a very, very good student. Dolly. Felistas, thank you so much. DSM, thank you so much. At least everybody has a figure. I'm not looking for correct answers. I'm just looking for figures. So long as you have some figure there. So long as you have some figure there, I am pretty happy. 1365, 1085, Collins. Thank you, Collins. Collins represents the physical class very well. Mary Ann is also around here. Thank you so much, my team. Now, for cell number 2, thank you for trying. You guys are crazy. For sure, AMA 2026 class, I will miss you guys. For sure, I will miss you guys. So in this case here, supply. So supply for cell number 2, you can see the supply here is 350. And the demand is 280, meeting the cell number 2. So we have supply here is 350,000. And then we have demand is 280,000. So in this case here, then quantity sold will be what here, somebody, the lower, 280,000. But you see, we had supplied more. We had supplied more. So we have unsold quantity. We supply 350, but we sell 280. So what is the unsold quantity? You subtract 350 minus 280, which gives me what here? Which gives me 70,000. Yeah. So then, ladies and gentlemen, look at how we shall get our profit. So our profit here will be the revenue, which is based on the quantity that you sold, 280,000 times 9 minus the cost. Cost is always based on the quantity supply. What were you able to supply? So what I was able to supply, right, is 350,000 times what here? We know the cost of supplying is 4. We wrote this here, the production cost, same as supplying cost. Yeah, and then unfortunately, yeah, we have quantity which is unsold. What happens with this unsold quantity? We must carry these things and throw them at Dandora dump site. And we are told the disposal cost is 0.5 per bag. You know, the examiner here was very, very explicit here. The examiner spoke over disposal cost. Not that you're going to sell this for some smaller revenue. No, it's disposal cost when you're not able to do what here, disposal cost. You're not able to sell. You're not able to sell. You pick this and go and throw it. Go and throw this. So I don't know who to believe. Is it 1085 or 1082? 85,000 is what I write here. 1085,000 is what I write there. So now we should be able to do this pretty fast. If I'm the one doing it an exam, I can see 350 supplied, yeah, and then 200,000 demanded. So I sell the lower. So I'll be able to do this very fast. 200,000 times 9 minus production cost is based on the 350,000 supplied times 4. Here I can see automatically 200 were bought. So 150,000 and sold times 0.5. So cell number 3, what am I able to get? 325. I'm told cell number 3, we have 325,000. 325,000. So long as you're able to picture very well, you don't have to write it down there. What about cell number 4? Try cell number 4 now yourselves. Try cell number 4 yourselves. Try cell number 4 yourselves. Even if you don't get it, so what? I'm being told 1,400, Stacy. Weekly 1,400. Very, very good. Very, very good. Now, then, gentlemen, cell number 4, this is what we have now. So cell number 4, what do we have? So cell number 4, what we have here is this. You can see the supply is 280 and the demand is 350. Yeah. So supply is 280,000 and demand is, so we always sell the lower quantity. In this case here sold will be the lower, the 280,000. So in this case here there is no stock which is unsold, because you can see demand was higher. When demand is very, very high, we sell everything. So we sold everything here. We sold everything. We sold everything. Yeah. And therefore, profit will be revenue minus cost. So profit revenue will be based on what you sold. 280,000 times 9 minus production cost. The supply cost, ladies and gentlemen, in this case here is 200 what here? 280. What you were able to supply, 280,000. And you know the cost of supplying is 4 per bag. So if you do it that way, what figure would you be able to get, ladies and gentlemen? For number 4, what figure were they able to get? Most of them got it right, 1,400,000. You come to cell 5. So cell 5, ladies and gentlemen, again, I can see a abracadabra here. We produced 280,000 and we demand was 280,000. So we sell 280,000 times 9 minus the 280,000 times production cost. There is no quantity which was left unsold. Yeah. So I'm being told that this one as well is 1,400. How about cell number 6? Cell number 6, let's work very hard for cell number 6. For cell number 6, what we have in cell number 6, I'm being told 640,000, the great ninjas there. Everybody shall give me an answer. Everybody shall give me an answer. Everybody shall give me an answer. Thank you so much, everybody here. Guys are crazily nice. So number 6, we can see what is happening, ladies and gentlemen. In number 6, we can see the supply is 280 and the demand is 200. So number 6, the supply is 280,000, demand is 200,000. So you have to be very, very careful. So you sell the lower. So quantity sold is 200,000. Quantity unsold, the one you have to go and dispose. We had supplied 280, demand is lower. So quantity unsold is 80,000. So you have abracadabra. Profit will be revenue minus our production cost minus disposal cost, because there is something sold. So revenue will be 200,000 times 9 minus the supplying cost. Production cost is 280,000 times 4 minus the unsold quantity, which has to be taken to Dandora for disposal at 0.5. So that one here, Collins tells me, will end up giving us 600 what here? 640,000. So Collins tells me that this one will be 640. How about cell number 7? Could there be somebody who has an answer for cell number 7? By any chance, cell number 7, by any chance? They're saying 1,000, or a million. They're saying a million. All of them are saying a million. So then, ladies and gentlemen, what we have here, for this very cell, we have this one. So supply is 200,000 and demand is 350,000. So we have here cell number 7. So supply 200,000 what we produce, and demand is 350,000. So we always sell the lower. So quantity sold will be the lower, 200,000. How I wish the examiner introduced, like if I'm the one who is testing this I will have introduced it. Yeah, the concept of what here, opportunity cost for any customer who is disappointed. I would have introduced that one. So like now here, the customers disappointed would have been 150,000. So I would have introduced like a figure of a small figure, like one book for every customer who is disappointed. Because you told us in your adverts that if you need it, we've got it. Now we have come all the way to your store and you don't have it. So we get disappointed. We spread negatively your name outside there. But here we are lucky because there is nothing like opportunity cost. So the quantity we sell here will be 200,000. Is there any unsold quantity? No. Unsold quantity here is zero because the demand is way high. Everything was bought. All right. Therefore, profit will basically be revenue minus cost. So no disposal cost. So revenue will be 200,000, what we sold, times 9. Minus cost is the cost of supply. Supply is this one here. 200,000. In this case, here, that's how they got their 1 million shillings. That's how they got their 1 million shillings. So this is 1 million. So for number 8, the same. You can see here the supply is smaller than the demand. So 200,000, 280,000. So we sell 200,000 times 9 minus the cost of supply, 200,000 times 4, no disposal. No disposal. So what are we able to get, ladies and gentlemen, here for cell number 8? Cell number 8, what? 1 million again. 1 million. So we go to number 9. So number 9, 200, perfect match. 200,000 times 9 minus 200,000 times 4, which will also give us what here? Which will also give us 1 million Kenya shillings. $4. So that is what we were expected to do for these very, very many marks in part A, where they gave us 8 marks. And then now they want us to determine the level of cement production the company should choose based on the decision rule of max mini. Max mini, is there somebody who can give me a max mini decision? Is there anybody who can give me a max mini decision there? Anybody who can give me a max mini decision? So max mini decision, remember, who in my table is not very good. My table is not very good yet to accommodate what I wanted to do. But basically, when we talk of max mini, my very good students, max mini, what comes to my mind? Maximum of who? Minimums. Alternatively, it is max is best. Best of who? Best of worst, like that. All right. And normally we start with these minimums. We normally start with these worst. We normally start with these worst. Yeah. So if we are here in the first alternative, the worst is the smallest profit. So the worst here will be 300 what here somebody? 325,000. The lowest in alternative 1 in all this. When you come here, the very lowest will be 600 what here? 40,000. When you come here, the very lowest will be 1 million. So you start with the worst scenarios. And then out of the worst scenarios, now you pick the best. So which one is the very best among us the 3? Out of the worst scenarios, you don't want to get yourself in the worst. Now you come and pick the best. You come and pick the best. So in this case, the very best of the worst is this 1 million. So this is the best of the worst. And as Martin is telling us, if this is the best of the worst, then we supply its quantity. So we supply 200,000. Supply 200,000 units. Supply 200,000 units. Best of the worst. Ladies and gentlemen, I still have 7 more minutes. I still have 7 more minutes. In these 7 minutes, let's read this question number 5 that I would want you to go and do. This question number 5. So you have your 10 marks, but if you lose it out, Joseph Chalo, on the payoff table, unfortunately, you will end up getting very, very few marks. So this question number 5, which you must do, everybody must do this. We are told truffle company makes a high quality handmade chocolate truffles, which it sells to a local retailer. All chocolates are made in batches of 16 to fit the standard boxes supplied by the retailer. The standard cost of labor for each batch is 6, and the standard labor time for each batch is half an hour. Yeah. In November, Truffle Company had budgeted production of 24,000 batches. Actual production was 2,500 batches. 1,200 labor hours were used to complete the work, and there was no idle time. All workers were paid for their actual hours worked. The actual total labor cost for November was 136,800. The production manager at Truffle Company has no input into the production budgeting process. At the end of October, the managing director decided to hold a meeting and other staff the choice of either accepting a 5% pay cut or facing a certain number of redundancies. All staff subsequently agreed to accept the 5% pay cut with immediate effect. At the same time, the retailer requested that the truffles be made slightly softer. I don't know whether there is a lady who has ever taken a truffle. They're very, very nice. I will ensure that I get you one of the fine days. Don't worry. Very, very good. Very, very good. All right. So we are told here, at the same time, the retailer requested the truffles be made slightly softer. This change was implemented immediately and made the chocolate more difficult to shape. When recipe changes, such as these are made, it takes time before the workers become used to working with the new ingredient mix, making the process 20% slower for at least the first month of the new operation. The standard costing system is only updated once a year in June, and no changes are made to the system outside of this. Now, you can see this is a budget we had made earlier on, and now we have got two critical changes. Which changes are these? The standard rate is going down by 5% because these employees have accepted a pay cut. There's a change in the standard quantity. You can see here now, not the standard quantity, but the standard hours. Yeah, because this thing has become quite, it's quite fluidy. Yeah, so it has become very, very soft. So shaping it up takes more time. So you can see the standard hours are going to increase by 20%. Well, the system will become much lower. Now, because of these changes, the examiner will tell you to calculate operating variances, will tell you to come and calculate planning variances. So you can see here for 8 marks, they want you to do the labor rate planning variance, labor rate operational variance, labor efficiency planning variance, labor efficiency operational variance. What do you think of this question? Is it a question that you guys can attempt? I know, unfortunately, most of you don't take me serious, but for this one, please take me serious. I would want you to attempt this. I would want you to attempt this in an exam mode. Exam mode. Exam mode. So very, very important. Very, very important. We try it. Yeah. So I think we have had a lovely class. So I expect you to try this. Yeah. And post your answers, whether they are right or wrong, in the WhatsApp. Please don't take this for granted. Do it. Labor rate planning variance, very, very important. Labor rate operational, labor efficiency planning, labor efficiency operational. Do this one within how many minutes? Talk of say 30 AMA. There is no, scarcity of time. Yeah, 30 minutes will be very, very good with this. And post your answer there. Post your answer there. The WhatsApp. Thank you so much. Today in the evening for AFM, we shall be doing a mock live. So the physical students who are coming today, I'll be standing by the door throughout. I'll give you 2.5 hours standing there, and then you do the mock. The online students, I hope you'll be able to do that mock also faithfully at your own time. At your own time, you do it faithfully, and then we revise it together. That is AFM. So today at 6 p.m., please don't fail to come. Collins, I can see you. Because of the exam, Collins, now I can see you planning other things. We shall come to college today for this the most important part of this training. Yeah, no discussions at all. I'll be there for 3 hours, 2.5 hours to 3 hours. And then the concept will be you just getting to do the easiest questions first. And then the other questions you're not able to do, you get them up. You do a few writings here and there, the theories like that. Then we see whether we'll be able to get the minimum number of marks needed for your survival. Thank you so much. Have a lovely day. See you in the evening. Bye. Which page? The same page. This is the same page. The same page. The same page, which is 342, eh? The same paper. The same paper we've been doing, page number 342. You can take a screenshot, just in case you don't have this book, and just have a screenshot there. That would be enough. Again, remember, do the things that Mwalimu is giving you. Do questions that you are now good at. Eh? So 2 things. You die with the teacher. Yeah, do the questions you're doing here, and the ones in the class that you are able to understand. Anything that you're not able to understand very well, as of now, if I were you, especially if I'm doing many papers, I forget about it. The examiner is not looking for perfectionism. No. Thank you so much. Bye-bye. Bye.